Good morning, students. How are you all? Hope you all are fine. Okay, students, I am also fine. Okay, shall we learn today's lesson? In accountancy, we have completed already 8 lessons, isn't it? Yesterday, I have completed the 8th lesson. Today, we are going to learn the 9th lesson, that is rectification of errors. So, error, mistake, isn't it? So, if there is any error that is made in the books of accounts, either in the trial balance or anywhere, from the beginning, that journal, ledger, anywhere in the books of accounts, it will affect the profit or loss of the business or the financial position of the business. So, the error, if it is made, it must be rectified. Okay, because every business person would like to know the correct financial position and correct profit or loss of his business, isn't it? If there is any error, it will change. It will show a false profit or false financial position. So, to know the accurate profit or loss or financial position, or the real profit or loss or financial position, all the accounts must be prepared very correctly. If it is prepared if it is there any error, then it will not show the correct profit. So we need to locate, and that means we should find out the error and we should rectify, we should correct that error. Okay, so first we will see what is the meaning of an error. What is an error? That means either recording or classifying or summarizing the accounting transactions wrongly. Okay, either we will record or we will classify or summarize. That means either that error will be made in the recording in the journal entries, or when we are preparing ledger accounts. That means at the time of posting we may make mistakes. Okay, we means the accountant or the clerk, one who prepares the accounts. Okay, or at the time of balancing the ledger accounts, or at the time of preparing the trial balance, they can make error, or they will enter the transactions wrongly, or they may omit any transaction. Okay, to record them. Who will make this error? The clerk or an accountant. Error means you should differentiate this error from fraud. Fraud means deliberately, purposefully they will correct the books of accounts. Understand? This one without our intention, that means unintentionally, and that not purposefully we do not make. At the time of doing that, it comes automatically by our carelessness. Okay, that is called error. So what is an error? That the meaning given in the book is, error means recording or classifying or summarizing the accounting transactions wrongly, or omissions to record them, okay, by a clerk or an accountant unintentionally. Okay, then these errors can be made in the different stages of accounting. Okay, first we have learned, isn't it, at the time of recording. So at the stage of journalizing, at the stage of journalizing, what error they can make? Either they can omit a transaction to prepare journal entry, isn't it? Either they can make an omission, that is omission. Then error of omission, it is error of commission. That means they may write the wrong amount, or instead of mala they can write. Okay, that is called commission. Or instead of writing 1,000, they can write as 10,000. All type of error will come under the word commission. Then, or the error of principle. In order to write furniture purchased, we may record in the purchase account debtor to cash. But the correct entry will be what? Furniture account debtor to cash, isn't it? By seeing the word purchase, we might have entered in the purchases account. Okay, that is wrong. So that is called error of principle. So at the time of journalizing, we can make that error of omission, error of commission, error of principle. Okay. Then next stage, what is the next stage after journalizing? Posting in the ledger, isn't it? Here also they can make all these. Okay. This omission may be uh, two kinds of omission, either complete omission or partial omission. Then error of commission and how they can make, into three ways they can make. Okay, either they may post in the wrong account. Okay, instead of posting that Bala, they might have posted in the Mala's account. Then they may enter the wrong amount. Instead of writing 5,000, they can write it as 500 at the time of posting. Okay, then instead of writing on the debit side, they may post in the credit side. Okay, so in three ways the error of commission can be made. Okay, then the third stage, what? Balancing. After posting, what we will do? We will do balancing, totaling and balancing, isn't it? So in these two ways only they may make mistakes, error, either wrong totaling or wrong balancing. Okay, when they total, okay, if they have not written the digits correctly, instead of adding as 500, they may write as they may omit one of the number. So instead of 5 plus 3, they may write as 7. Okay, so either wrong totaling or wrong balancing. Then the fourth stage is preparing trial balance. At the time of preparing trial balance, also they can do two kind of error. One complete ledger account can be omitted, that is omission. Then other commission, what are the error they can make? Then they can write in the wrong account. When that Bala, I told no Balas, they may write as Mala. Then okay, wrong account they can enter, or they can enter the amount in the wrong amount. Instead of debit side, they may write us on the credit side. Then or they can enter the wrong amount from the ledger balance. Okay, wrong amount can be entered, or in the wrong account they can enter, or on the wrong side of the two columns of the trial balance they can enter. So all these four stages they can make the errors. Okay, at the time of journalizing or posting or balancing, or at the time of preparing trial balance. Okay, now we will learn the types of errors or the classification of errors. What are the classification of errors? From this also we can say the first one is error of omission. That one also divided into error of complete omission and error of partial omission. Okay, so we will see one by one in detail. Okay, error of complete omission. What is a complete omission? Here, in any stages it can happen, isn't it? Omission, here posting. Okay, then you see at that time of preparing trial balance also they can make the omission. So the failure, so what is the complete omission? That failure to record a transaction either in the journal, or instead of journal we will prepare subsidiary books, isn't it? So either in the subsidiary book or to post in the ledger. The posting both the aspect. Okay, that means the whole journal entry will be omitted to post in the ledger. Okay, here this error affects at least two accounts or more accounts. Two or more accounts, because one transaction, complete omission means either they will omit to record, they fail to record either a transaction or a transaction in the journal or the subsidiary book, or failure to post both the aspects in the ledger. Okay, so in the journal they will not prepare the journal entry. If they have prepared the journal entry, they they may make mistake at the time of posting. They may leave the full journal entry to post in the ledger. Okay, or if that business concern is not preparing journal, they are preparing the subsidiary book, one transaction can be omitted. Either the purchases book is omitted to enter in the purchases. Okay, then error of commission, error complete omission, then error of partial omission. Here partial omission means he may fail to record a part of a transaction. That means part of a journal entry. Okay, that is called partial omission. Here if we enter the transaction, we will prepare the entry, journal entry, isn't it? Partial omission will occur mostly at the time of posting a journal entry. Two aspects are there. One aspect we may post, the other one we may not post. Okay, a credit sale, we may enter in the sales book, but we may omit to enter in the that customer's account. Okay, that debtor's account we may omit to record. Okay, that is called partial omission. Here it will affect only one account. Okay, but complete omission will affect either two accounts or more than two accounts. Okay, so that first one complete omission and the second one partial omission. And second type of error is error of commission. First one error of omission. Okay, in that one it is divided into two, complete omission and partial omission. Then number two, error of commission. Error of commission can be made in different ways. Okay, so what is error of commission? If a transaction is incorrectly recorded, okay, it is recorded wrongly in any way, either in the amount or in the account or in the wrong side at the time of posting, all these will come under this error of commission. Okay, so why this error of commission occurs? Due to the carelessness or due to lack of concentration, this error occurs. Okay, carefully they have to enter the journal entries at the time of posting. Okay, 450 they will see, when at the time of writing they may write as 540. That is called error of commission. Okay, so here in different ways this error of commission can be made. How? Entering wrong amount in the correct subsidiary book. It is also one. Okay, in the subsidiary book purchases, purchase of goods on credit for 540. They may enter in the purchases book only, but they will write as 450. Okay. Then that is called error of commission. That one entering a wrong amount in the correct subsidiary book. Then the other one entering the correct amount in the wrong subsidiary book. Another way. Okay. Here they are entering the correct amount only, but where they are entering in a wrong subsidiary book. For example, that they might have purchased goods from the supplier, but they will write that same name will be there for the customers. So in the customer's account they may post. Okay, but the correct amount they will post, but in the wrong subsidiary book. Okay, purchases may be entered in the sales book. Okay, then both can be made wrong amount in the wrong subsidiary book. Okay, combination of these two, wrong amount and wrong subsidiary book. Okay, in the goods purchased they may enter in the sales book, and amount also they will write wrong. Okay, then the subsidiary book, when they total, either it will overcast. That means instead of 500 they may add and write as 600, that is overcast. Or undercast, instead of 500 they may write as 400, that is undercast in a subsidiary book. This is another error. Okay, so either they may total more or they may total less. That is called overcasting and undercasting in a subsidiary book. When we add, the correct total may be 1000, but if they write as 900, that is called undercasting of subsidiary book. But instead of 1000, if they write as 1100, that is called overcasting in a subsidiary book. Okay. Now subsidiary book now over. Okay, now we will come to the ledger account. So in the ledger account, what are the errors they can make? Okay, so in the same way, that correct amount they will enter in the wrong side of the account. Wrong side of the account. Account is also correct. Account correct, but the wrong side. Instead of debit side, they will post on the credit. Okay, because ledger account has two sides, debit side and credit side. They may post on the wrong side of the account. Okay, but amount is correct, account is correct, but the wrong side they may enter. Okay, so here also we can say, now they may enter the wrong amount in the correct side of the account. In different ways they can make, isn't it? Wrong amount they can enter, but on the correct side of the account. Then in which way they can make? Wrong amount, wrong side of an account. Both they can make wrong. Okay, wrong amount, wrong side. Okay, here one is correct, the other one is wrong. Here also wrong amount on the correct side, but here both are wrong. Wrong amount, wrong side of an account. Then the next possibility. Here the correct amount they will write, but they will write in a wrong account. Okay, wrong account. Okay, in many ways they can make, isn't it? Then wrong amount, correct amount we have written. Wrong account they can make, wrong amount also. Everything wrong. Okay. Then wrong account. Everything can be made wrong. Wrong amount, wrong side, wrong account. Okay. Then sometime they may do double posting. Once they have posted, again they will post. The same aspect will be posted twice. Okay. That purchases 2 times we can enter anyone. Okay, that all this you can understand, isn't it? Because we make many mistakes when you write the test also. The same thing we can write twice the same mistake. But the correct thing, if we write twice, that becomes an error, isn't it? And the same way, double posting, then double entering in the journal. Okay. Journal entry. For the same transaction, we may write 2 journal entries and we will post it twice. Everything will become double, isn't it? Then, at the time of that explaining the journal, I told you, at the end of the page, they will write all the debit side and all the credit side column here down, carried forward. Okay, carried forward, not carried down. Balance carried forward. In short, we will write CF. Okay. In the next page, here we will write one amount. Okay. So, for example, this is the amount. When we write on the next page, we may write it as the other amount. How we will write, balance brought forward. Okay. All the amount will be there, but we will write here and there. Okay. Here 2,56,100. Here 1,25,600. This is called carried forward mistake. Okay. Error arising in carrying forward from one page to the next page of the account. Okay. Either in the journal entry or in the journal entry, it will not affect. Okay. But when we post in the ledger account, if you turn to the next page, if you write the wrong amount, it will affect. Okay. So carrying forward, error. Okay. From one page to another, when we carry forward the amount, the error occurs. Then error occur at the time of balancing and totaling. Okay, totaling and balancing the ledger account. Okay, now the next type of error, the third type of error, we will see error of principle. So the whole error, that rectification of error, you should read. Okay, all the question that you have to mark the errors, that question answers. Okay, so I will complete with this error of principle. Okay, here, what is the meaning of error of principle? That mistake committed in the application of fundamental accounting principles. Okay, we know the accounting principles, dual aspect concept, matching concept. Okay, the rules in the in the application of the rule of accounting, if they make any error, that type of error is called error of principle. Here we will see or two or three or four only there. Okay. For example, entering the purchase of an asset. There itself I have told you. Then in journalizing, third chapter itself we have learned. Purchase of purchase of an asset may be entered in the purchaser's book. Usually in the purchaser's book, what we should add? We should write only credit purchase of goods. We may not enter the purchase of an asset, but if we enter in the purchase book any asset when we purchase, that is error of principle. Okay. Another one, same thing, entering in the sale of an asset in the sales book. Okay, in the sales book. In the sales book, we will enter only the credit purchase of goods meant for resale, isn't it? But if we purchase any asset, if we sell any asset, that should not be entered in the sales book. If we enter the sale of asset in the sales book, that is called error of principle. Then here, then the third and fourth one regarding the capital and revenue nature, that you are going to learn in the 11th lesson. Okay, the capital, revenue, expenditure, there you will understand. Okay, here because all the expenditures are divided into capital expenditure and revenue expenditure. Capital, revenue and capital income and revenue income. Okay, capital expenditure into revenue expenditure. Okay, so here capital expenditure, for example, we can say when we are spending some amount for the construction of a one separate room. Okay, construction of a room, that is capital expenditure. If we consider this ordinary expenditure as revenue expenditure, that is called error of principle. Okay, now the opposite, revenue expenditure as capital expenditure. Revenue expenditure as capital expenditure. Okay, both are wrong. Then we can say that revenue income into capital income. Okay, that they may not do like that. Okay, so if they make any mistake like this, capital revenue nature, that is also will come under the heading error of principle. Then the last one is compensating error. Okay, compensating error. One error will compensate the other error, then it will not reflect in the trial balance anywhere. Okay, here in one place, that means they will compensate each other. That means one error will be rectified by the other error. So we have made two errors, but we cannot locate that particular error because that on the debit side we have entered 5,000 wrongly more. The credit side also we have entered 5,000 more. Then it will tally, it will not reveal any errors. Okay, this is called compensating error. Compensating error will, that one side either excess credit, here excess debit, both. Okay, we can call them as offsetting errors also. Offsetting errors. Okay, we have learned all the kinds of errors. So you read the full lesson up to compensating errors. Okay, students, and you yourself mark all the question answers what are coming under this topic. Okay, so you have to learn this question answers, mark and learn the question answers. Okay students, thank you very much.